Hello and welcome to another edition of Decoding with Finsec, the Finsec podcast. In this podcast, we discuss latest issues of SEBI, RBI, and today we have Sandeep along with us. So, going to the topic straight, Sandeep. Today we're going to discuss uh, the board meeting of SEBI, which happened last week. SEBI in its board meeting took some 10 to 12 decisions. We're going to stick with 5, 6, 7 discussions, 7 topics to be discussed today. So, without wasting anybody's time, I don't think you need to be introduced and the firm needs to be introduced. I will start straight to the topic. The first amendment that has been proposed in the board meeting today is the MPS norms, which is the minimum public shareholding norms. For the viewers, any company to which goes for listing requires to have a minimum public shareholding. That is, let's say 100% is held by the promoters, 25% minimum has to be diluted to public, and a maximum 75% can be kept with the promoters. So now what SEBI has proposed in this new board meeting is to say that if you are a large company that is up to 50,000 crore market cap, then you have at least 3 years to you can do an IPO for 10% dilution only and come up to 25% in 3 years. Now, even further reductions has been done for even larger companies which have market cap of more than 50,000 crore. There, SEBI has said that you can go up to 10% in 2 years. You can start with even with less 10%, like LIC, they gave a special permission. So they were less than 10% in 2 years. You can start with an IPO of 8%, 7%. And over a period of 2 years, you have to come to 10%. And over a period of 5 years, come up to 25%. So basically, the logic behind SEBI is that there are large market cap companies may not be able to do a IPO with such high demand, and to that extent, a gliding path has been given to them that you first start with 8, then come to 10, then 25. So basically, just want to know your thoughts as to whether there's a good move, whether everybody should be standard minimum 25, or is it fine because we're large, you can start with lower dilution. Or what about public float? What if if every 2 years there is dilution, then the market price impact on those companies that there will be dilution in 2 years, another dilution in 3 years. So there will be some impact on the price. So people are never sure till the 5 years, the market dilution, etc., and the public float, etc. So what are your reactions to that, Sanjay?
So, thanks, Anil. I think there are kind of two reactions. One is, I think, the immediate reaction. I think it's a good move, especially because I think several large IPOs are in the pipeline. Specifically, I think RBI has mandated several really, corporate holding companies to come with IPOs because they're deemed to be NBFCs. So it may be coming from there, really. I mean, that might be the problem they're trying to solve. But I think more importantly, from a jurisprudential point of view, I think we're just kind of micromanaging things to a great extent. In 2022, SEBI decided they're going to do away with the concept of promoters, and minimum public shareholding is really connected to the concept of is the inverse of a promoter. Okay. So, what is your non-promoter holding? So, they have actually kind of retrenched back from that board decision, which is surprising because ultimately, I think we are the only country in the world which has this concept, and it's a static concept, as you know, as opposed to controlling interest. And it's also kind of a departure from the concept of limited liability because you're holding shareholders responsible for the actions of a company or its senior management. So I think if you were to ask me from ease of doing business, I think most of it needs to be dismantled. Really, I think should have some minimum number, which is there. Let's say 5% for all companies, and maybe go up to 10 or whatever 20% over a period of 5 or 10 years. And maybe have it uniformly applied. Keep it very simple. We don't need so many, create a rule which is not enforceable. And we have so many public limited companies which are, when I say public limited, I mean public companies which don't comply with these norms and they get penalized by
PSUs, you mean?
PSUs.
Like UCO Bank, Canara Bank, which are all public revenues, LICs.
Whole India, all of it. So I think we've created rules which are not easy to enforce, and the best example is public companies, public as in
PSUs.
Government, yeah, PSUs. So why not just create a simple rule which is not very difficult to enforce, and ultimately I think we are going to go away as time goes, as the markets become more liquid. The whole concept of uh, dominant shareholding will reduce. Especially the kind of valuations people are getting today. And over a course, I think of last 10 years, I think the if you look at the average promoter holding, it's gone down almost 10 percentage points. So that's the way to go. So I think we need to dismantle this whole thing, keep it simple, keep it more or less uniform. Maybe you have two rules instead of five separate rules, and that's probably the future of at least if one were to be hopeful about.
But I never understood the sanctity of this whole 25% being public float. So long as there's enough liquidity in the stock and there are divergent, 10,000 shareholder, 100,000 shareholder, minimum trading of volume is this much. As long as that is maintained, there's liquidity in the stock. How does it make it? Then why do you have to make compulsory in 5 years? You have to make 25%. Everybody knows the no market is going to be dilution again, dilution again. So that does not give any shareholder also a very very confidence in terms of what is the exact price of the securities. So to that extent, it's just a basically you have to tick the box. Okay, 25 we have made the rule. Okay, give them gliding path. We have to tick the box 25 again. And so many years all the PSEs have not maintained, and they've been pushing. But I don't know how much pushing is happening. But end of the day, they are not. There are now we have in India two sets of rules for listed companies. One is one your PSU, one is non-PSU, and then there will be new rules for a large company, a very large company, and small
Super
company.
large company
And
ones.
there are other rules for SMEs also. Very small company, then very separate rules. So in terms of uniformity, in terms of law, in terms of the principle based, it's all jugaad for each and every segment of the market.
I totally agree on that. I think we're not just kind of micro engineering, we're hyper engineering something which doesn't need to be engineered at all. And there should be one simple rule which says, over a period of let's say 5 years, you can come to market with as whatever percentage you like, but in a period of 5 or 7 years, bring it to whatever number, some rational number like 10 or 15 or maybe 20% should be in public hands. And I think the other route is what you said is like have so long as you have 10,000 shareholders, why should you
But
care?
yeah,
And that's kind of the more US system, right? So you have X number of shareholders, you automatically the listing
yeah,
norms would apply. They'll also take away all the overhang that we have with companies like NSE, where you have so many,
correct.
I don't know, a lakh plus
Yeah, easily. Yeah,
shareholders that they have. So I think that arbitrage goes away, number one. And number two, I think it's very easy and simple to enforce, and it's frankly easy for the investors, frankly easy for the company itself.
yeah. And IPO should not be something which is a choice for people who have 10,000 shareholder, 20 NSE. If SEBI is not interested in, if is interested in public investors, there are so many public investors invested in that company, and there is no formal exit mechanism. And that's why IPOs are. You cannot grow in such huge size that tomorrow the NSE says, I am never going to list. What will happen to those shareholders? How will they going to sell? It will be impossible to dilute their stake if tomorrow NSE decides. Nobody in the world can say NSE has to do an IPO. So from that point of view, I think the legally IPOs structurally people have to see is the liquidity. Why do we need IPO listing? Is because there are a lot of shareholders. There should be liquidity for people to sell. Simple thing is that. But I think let's move to the next topic. In the interest of time, then again is another topic is on thresholds only and numbers only. Is the RPT thing. Now, related party transaction. What SEBI current laws currently is that any related party transaction which is 10% or more than your annual turnover last year or 1000 crore, whichever is lower, then you need to take a approval of shareholders, majority of minority. That's the rule. So of course there were issues with larger companies again, and SEBI said, okay, fine, this number is not tenable for you, let me relax those numbers for you. So if you're again they have done great scale based this thing. If your turnover is uh, uh, 20,000 crore less, then it is 10%. The thousand is gone, 10%, which is 2,000 crore. Then 20,000 to 40,000 crore again is 2,000 crore plus 5%. So moti point is this, that what SEBI is trying to do is that for related party transactions also, which requires majority or minority approval, there are the materiality thresholds have been changed, and that has been this is the size of your turnover last year. If you're larger the size, then the turnover the threshold becomes higher. That's the short point of it. So your reaction?
No, so I think again, over engineering at its worst, really. Uh, and once again, I don't think any other jurisdiction has these kind of RPT norms. And again, if you look at the results, we've seen a Tata company where 3% shareholders defeated a resolution because the person who has the economic stake the most is not able to vote at all. So it can create bizarre situations, and frankly, situations which are not actually useful to the shareholders themselves. Um, so I'm not sure where SEBI is going with this. First you create a whole web of laws, and then you try to create other relaxations out of that, and then it becomes more and more complicated. And, every company requires a bunch of lawyers to interpret what that really means. I think there has to be a need to uh, completely revisit this. I think yes, India has had a problem of abusive related party transactions, but I think the way we've uh, reacted over the past decade, I think, has been completely a overreaction. And it's caused real pain amongst good companies. And of course, all laws do create pain amongst good companies. Hopefully, the pain is higher with the crooked companies. But I think this is an example of overreach, and I think we really need to rethink, resimplify the materiality thresholds, and frankly, this whole majority of minority has to have some alternative mechanism, because I think if a 3% bunch of shareholders can defeat something which is good for the company, I don't think the law is appropriately.
But the 3% also, people can easily blackmail. When see most of the MNCs and most of the PSU, we have 75% held by this large promoters. Now they cannot go beyond, and you just need that 3%, 2% just to, because half the people anyways will not vote. So then you can easily blackmail these guys to take what you want. So from the point of view of, again, RPT, as you rightly said, the problem that I feel is that it's deemed abusive. It's not other way around. You prove it first, because it's a higher size. You need prior approval. Why is it something that is has been analyzed whether it's good for the company, or if it's good for the company, then why should it go for majority? I can the competitor can hire 2-3% of a listed company and buy that 2-3% and sit there and block all resolutions. Sit there and just do that.
Probably happens.
Probably happens. So that's why I'm saying. Point is that entire thing of this RPT turnover and what has company, what if you see the first regulation and the second change, what is SEBI changing for the large players? SEBI say the large big boys come to them and tell them, knock on their doors, boss, मेरे को बहुत problem हो रहा है, how do I do this? Make some relaxation. But nobody's care about the small boys. The small boys will keep facing the problem. Oh, large boys will make some relaxation for you, keep making relaxation for you. But the people see, abuse is somewhere. Director is getting a house on company's name, which is Gensol kind of a case where you that is abusive. When you know abuse and when you know
And they did it despite the law.
despite the law. So point is that your enforcement agencies should look into abuse. You should not make law a presumption of abuse and make it for people to do bona fide transaction difficult. And that's where the RPT and majority of minority approval. I have never seen where you give in the hands of the people that 12% of people will decide, shareholder will decide what the entire 100% has to do, which is I think is counterintuitive for any good business commercial. But that's what it is. Uh, then let's move to the third one on the FPI. Not much detail. I don't think too much has happened. One thing they have done is in terms of now Indian mutual funds can now invest in, let's say, there's one new thing they have done is that since now Indian mutual funds have problem, they've capped the direct norms to invest offshores. RBI had capped that limit and everybody has reached that limit. So no further in, let's say, the whole tech boom which is happening in US, the NVIDIAs of the world, which are raising oracles of the world, the price is moving, but Indian cap markets, Indian mutual funds have not taken a pie on that because RBI has restricted their investments on offshore. And so now what SEBI has proposed is that there are a lot of offshore mutual funds like the Vanguard of the world and all who are registered as FPIs with SEBI and invest in India through the FPI. So mutual funds now can become constituent of those FPIs. They can invest in the FPIs who are mutual funds there offshore and then invest in Indian. So end of the day, they will invest in India also and get some pie offshore also. So to that extent, mutual funds are now permitted to invest in FPIs. That is one thing they have done for FPIs. Another thing that they have done is like for the large big players or government and pension and all those regulated entities, mutual funds, etc. offshore. They have Swagat FY. You are Swagat. You're welcome. So what they have done is single window clearance, take the boss, everything will be done. So that is one thing, but not much. But yeah, FPIs again, one thing that they wanted to, I think Mr. Pandey, the new chair, had said that they want to create a thing of direct market taxes where you would, like offshore retail guys can, like how I can buy directly Apple stock sitting here, but not offshore residents cannot buy Indian stock sitting there because they unless they register as FPI. So they wanted to create that up to a particular amount. That has not come, but from an FPI perspective, they have just made some slight changes. Any reaction to that?
So I think the way forward is certainly making it easy for we've created so many regulations around foreign portfolios. We have the NRI bucket, we have this bucket, that bucket, and then there are quotas, and if you go 10%, then it's no longer FPI. If you're below 10, are you FDI or not? I mean, so many
Big
kind
issue,
of.
correct.
I mean, every day there's some kind of complication that you face with. So I think there has to be simplification of the whole thing, and just the way it's pretty easy to buy Apple stock today sitting here, because money is going through banking channels.
LRS,
They're
yeah.
supposed to make sure that this money laundering laws, etc., comply. I think that should be good enough for you're getting. And again, why have this whole NRI business, and it's not even that's a multiple definitions of NRI, and this definition basically means brown person.
And it's PIO. One
Yeah,
more.
yeah, sorry. So
Purchase of Indian
yeah,
origin.
so I mean, I think it should be greatly simplified. Let foreign investors as a whole invest in India easily, so long as of course they comply with money laundering and similar laws.
Off topic we are going, but this FPI FDI is interesting. So the latest position in law they are saying is that if it is less than 10%, it is deemed FPI. So if you want to buy 1% of a listed equity, I want to invest 1% in listed equity by pref allotment, not even direct market. Then also you have to register as an FPI, then only will allow you, otherwise it's FDI. Will not anything above 10% is FDI, anything above less than 10% FPI, and an entity to buy even under pref allotment. First register yourself as FPI and then invest. Ridiculous. But yeah, that's what it is right now. It has covered in the papers, and also we are not the first person to talk about it. So moving to the next topic, uh, REIT. I think that's a one good move that they have made finally, wherein they have allowed that for mutual funds who invest in equity and hybrid instruments, REITs will now, earlier was to REITs and invest both used to qualify as hybrid. Now REIT will seen as equity. And good thing about InvITs, earlier the cap of 10% was REIT plus InvIT. Now the entire 10% goes to InvIT. So InvITs will also will be happy. To that extent, that is a good move. I think you've written also
No,
on it.
so I wrote just 2 days before they implement, so which is nice, good timing. And even tax wise, I think the treatment was already that of equities. I think it's going to align with the tax laws. It's going to be good for the infrastructure development of India, generally speaking. And it REITs do have both upside and downside. So I think that was not completely an accurate way of looking at it. So I think it's a good development, in which still continue to be hybrids. So, but like you said, there's more
More to
space
InvIT
for
here
them. So I
also.
mean,
Yeah.
they're also happy. So I think it's overall going to be good for investors and good for
Yeah.
the REITs themselves.
And even InvITs by definition has more debt in the operational capacity as opposed to REIT.
That's right.
A REIT, once it's operational, then it has debt free almost. But this InvITs are almost always in debt.
Literally.
So to that extent, the very nature it is debt oriented. So the hybrid is a better version for InvITs anyways. Uh, One last legal thing, and then we'll couple of non very legal thing. Last legal thing is that amendments in the investment advisor research analyst. Short point is that now SEBI says that if an IA and RA has advised clients and created some returns for the clients, whether they can showcase the past returns that they have created for their clients. So SEBI had introduced something called a PARVA, Performance Accreditation Agency, which has not taken off till now. So basically, now they have given a freedom to them. Ki, boss, now you can put, but get it certificate from CS, some firm, and they standardized formula will be set up by ISF, where I'm also set. So basically, we create one formula for them. They will use that formula, and till the time Parva comes into picture, people can put their uh, past performance again, but not publicly. Like how we discussed, we'll do one by one, one to one. client asks for you, tell me what is your performance, you give a share in UTP, then I can show you my performance. I cannot advertise my performance. So that to that extent, it's not available public at large, only in one-to-one communication. Because a client comes to you and says, boss, I want to invest through you. How much returns have you made from the last? No, I cannot talk about it in losses. I cannot talk about it in past returns. To facilitate that, at least SEBI has permitted this. So some movement we've had in this. So
No, so my thoughts is again completely unnecessary, and I think it's for essentially with saying that 2 plus 2, you have to go to a certified agency which will say, okay, this is 2 plus 2 is indeed 4. Now, what should have been an Excel sheet entry has to be certified when I think if at all there was some difference in how people are calculating returns, IRR as they call it. Um, I mean, they should have just simplified it to say that this is how everybody should calculate returns, and let everybody comply. And again, 1 out of 1,000 kind of is mischievous. Certainly go after them, but I think this is completely ham-handed to say that a mathematical necessity, which is your past returns. It's not speculative. It's not forward looking. It's just a simple mathematical formula. Has to be certified by an external agency. And again, first principles, I don't see why you can't advertise your past record. If you're smart, you advertise that you're good. If you're not very smart, you're not given returns, you'll obviously keep quiet. So you kind of today, by keeping the smart guys quiet, you're actually taking away that huge benefit which an investor has to see, okay, this guy's performed well over last 6 months, 1 year, 5 years, 10 years. And you're putting that person in the same bucket as a person who's not done anything at all. I mean, who's given negative returns. So I think it's really a self goal, if you ask me. And now they want to again relax that self goal for 2 years, which is
and hardly 500, 300 people.
yeah.
So
And they're
800
killing the
people,
industry, as
a
the
small
numbers are
bit
going
of,
down every year. So it's just completely poorly
too
designed
much
regulation.
time and resources wasting on something which is not very, very big in India already, and they'll never allow it to be big. So much supervision, so much time and energy is getting wasted on this. That's fine. This IARA thing, if you see in the past for 3 years, the most changed laws have happened in 3 years in this IARA. Basically, nothing has taken off. But okay. So one more thing that SEBI is also opening more branches apparently. Uh, the earlier chair had shut it down. The new chair is opening up. Is it politics or is it something necessity? What is it? Because we have too many too. As in, our SEBI is sitting with a lot of money. There are unemployed people in the country. Might as well hire them rather than get some rent, pay some rent. Otherwise, Sarkar will take away all my money. So might as well spend some money. Or is it something? No, we require physical presence of people.
No, so I think it's I don't know, chairman to chairman, this keeps changing. I think there's one chairman who bought all these offices
Yeah.
all over the country. I think nearly every state had an office or something like that. And then next chairperson kind of shut them all down, and now again we have new. I think looks like a lot of waste of money to me. But it should not be based on who the chairperson is really. There has to be a strategic idea of why you need offices. Are those offices empowered? Does it kind of are all decision makings being delegated, etc.? I think if the answer is no, and plus, like I said, it can't keep changing. There's huge costs involved. Just because they don't want to hand over the money to the government of India doesn't mean they should buy real estate. So yeah, not much more to say.
Yes. The last topic that I need to discuss is that appointment of directors in on MIIs being uh, stock exchange clearing corporates and depositories. Now, Sarkar will also tell you, SEBI, not in Sarkar in this case, SEBI will tell you basically as to how many directors you should have, how many EDs that you have. One will be compliance ED, one will be regulatory ED, and those ED will report to MD, there's a governing board, every single thing that people, a company which is now listed companies. These are all, half of them are listed and half of them will get listed in some course. And to that extent, such kind of prescriptive governance mechanism of appointment of specific people and reporting, etc. Is it something that they don't want the process? They don't want. They are not interested in what has to be done, but who has to do is more important because so they put the liability blame on somebody, because they see is public utility vehicles. I cannot ask them to shut down. So they know that they are immune, they cannot be shut down, and they cannot be imposed penalty because again it's a public utility vehicle, etc. So we want to get more people that I want you to hire so that I can impose penalty on you and create an example out of it. Is that the rationale?
So no, so there's a good news here, I think, which is you look at the consultation paper, it was like
Yeah.
much more intrusive, quite uh, you know, it talked of EDs reporting, having dotted line responsibilities, very very unusual kind of governance mechanism for regular company. And of course, SEBI's response, thankfully, was that they are not going to implement those. Essentially, what they've said is that there will be two EDs, and they'll go through a prior approval process like the MD, and EDs will thankfully report directly to MD, and not through
Governing body.
some governing body directly, except for appraisal, etc. So I think they've backtracked on 90% of the proposal, which is good news, because I think you need to respect the corporate structure. You can't have EDs kind of seceding from the company and kind of having their own ball game on the side and reporting
But
directly
why
to.
EDs? You have KMPs already. I have an MD. I have two KMPs sitting CRO, a CTO, CXO. These guys are reporting to the MD. These guys, anyway, SEBI earlier also have made CROs, etc. liable. Why is the elevation required so that there will be problem that MDs now will face that who's the boss, and then you don't want three heads in one organization.
So I think this is exactly the same problem they have with what they call public interest directors, as if there are people who've been brought down from heaven to rule the exchanges. So I think all of this also has another problem, which is provides a false sense of security,
Correct.
that you have these PIDs coming from heaven, and you have EDs which have been appointed by SEBI itself. Maybe again, I'm only guessing, but maybe it's coming from the fact that they want the MDs not to have untrammeled powers. So it might be coming from there that they want two people who are just below the MD who are answerable to SEBI there because they're appointed by SEBI in almost. So there will be kind of some checks and balance within the organization, and there's probably I don't know if it's a good way to think of it, but it's probably not uh, that extreme a situation. But I think they do need to kind of relax other norms that they have. Thankfully, they've, like I said, not accepted most of the consultation paper recommendations.
If you see, both India's largest commodity derivative exchange, India's largest stock exchange, both that CEOs, directors have been penalized. Even CROs, CXOs have been penalized multiple times, not once. It's not like earlier SEBI has not taken action against people who are head of the organization, which are market intermediaries. So to that extent, market intermediaries have always been close association with SEBI, and SEBI has always taken action against, irrespective the CEOs also, and also the lower rungs in the not in the complete lower, second in command type of situation. So I don't believe that there is any requirement to be over prescriptive. Even then they had PIDs.
Yeah.
A lot of things that have happened, PIDs were there still.
Yeah.
No, there.
No, so
Adding
this,
two more directorship,
yeah,
deciding that two more EDs, that will solve a problem, or that will just to pin two people more to
two
blame.
more people. You're right. So, and which is where it's coming from, probably. Like they want
Yeah,
more people to pin
yeah, I think
blame on.
that because CEO का हर बार नहीं कर सकते ना फायर,
But
तो बोल किसी और को फायर करते हैं.
no, but 20 years back, you had the regulator people sitting on the exchange board. I don't know if you know this, but and that was even more bizarre because then you had the regulated entity had people from officials from SEBI sitting there. So it was pretty embarrassing actually. Whenever they did the enforcement action, your own employee was sitting on the board of the exchange who you penalizing. It's very hard to justify that with a straight face. I think at least we've come away from that practice. But yeah, I think so. Like I said, I'm not so anti this move, but certainly it brings in level of micromanagement which may or may not be needed.
Okay, I think that's it for today.
Thank you.
Thank you very much for everyone's time, and we'll see you in the next episode of the podcast. Thank you so much.